I'm sure all of you would have applied your mind to these pointers which I had mentioned to you yesterday, and that is what is capital employed, what is investment, what is gross working capital, what is working capital gap, and what is net working capital. And I'm sure all of you would have come to different conclusions. Uh, Let us uh, go straight away to as to how these terms are to be understood. And why am I discussing these terms with you, friends? And that is because, based on my experience of delivering this program all over the globe in more than 50 locations, I have realized that many of these terms are not understood very clearly by most people. As far as all these aspects are concerned, as far as the assets, liabilities, equity, net worth, current liabilities, non-current liabilities, current assets, non-current assets are concerned, there is no problem. Everybody is quite clear about them. The confusion is with regard to the capital employed and with regard to the investment. Now, let us understand what is capital employed. How do we find out the capital employed? And of course, friends, it's very simple. Capital employed simply means money that you bring into the business is capital employed. And there are only two sources all over the world of bringing capital into the business, and those two sources are equity plus debt. So capital employed is nothing but all the long term sources put together, all the long term sources put together, and that is what is capital employed is. Then what is investment? And friends, again, just to share it with you, I have seen most people have a confusion about capital employed and investment. Most people think that both are same, and and they can be used interchangeably, but it is not so. Capital employed is different and investment is different. What is capital employed? As we said, capital employed is all your long term sources put together is capital employed. What is investment? Investment is what you do with the capital that you have brought into the business is investment. So capital employed is money that you bring into the business, and investment is what you do with that money. And we all know it very well. In business, what do we do with the capital that we bring into the business? So we purchase non-current assets with the capital that we bring into the business, and we also procure current assets, because we know merely building a factory and putting the plant and machinery there is not going to be enough. You will also need to have the raw material, right? So you will also have the current assets and minus the current liabilities. So this is what will give you the investment. That is what will give you the investment, right? So capital employed is money that you bring into the business. Investment is what you do with that money is your investment. Now, how do you differentiate between investment and investments? So remember, what we have discussed just now is investment. The company brings capital into the business, and with that capital it purchases the non-current assets and the current assets. All of them put together minus the current liabilities is known as investment of the company. And what is investments? So when somebody puts his money into different avenues of investment, securities, share market, debenture, gold, or bonds, or real estate, so all that is known as investments. So that is the difference between the investment and investments. What is gross working capital and what is operating current assets? So gross working capital, GWC, is nothing but all operating current assets. All operating current assets. Please remember, and I'm sure you will remember, yesterday we discussed marketable securities. Even though it is a current asset, but it is not an operating current asset, right? So GWC will include all the operating current assets. That means the current assets which are going to help the business in running the operations. So what will come here? Inventory will come here, receivables will come here, loans and advances that the company may have given to various people for the purpose of their operations, and plus the cash and bank balance. So all this will be part of the gross working capital, and this is how you will calculate the gross working capital. Then you have something which is known as WCG, working capital gap. And how do you find out the working capital gap? Working capital gap is gross working capital minus the current liabilities. And what are the current liabilities? We all know it. So current liability is your trade payables, your other current liabilities, other outstanding liabilities, and that is your current liability. So from the working capital, from the gross working capital, when you deduct the current liabilities, what you get in your hand is known as working capital gap. And what is NWC? So NWC is working capital gap minus the bank finance for working capital, and that is your net working capital. In a way, net working capital is the gross working capital minus all the current liabilities, and that is net working capital. Friends, as the company's secretaries, and as I keep saying, as the KMP, or in case if we are in the practice side of the profession, we have to be aware of the fact that the working capital management is extremely crucial for any business and every business everywhere in the world. And why is that so? That is because it is the experience and the research shows world over that whenever a company has closed, it has closed primarily because its working capital management was not good. So the moment a company is facing a problem of working capital or working capital management, that means it is the onset of closure of that company. And therefore, even though we are company secretaries, we are advising the board and the board members, it is our responsibility to keep a track on the working capital management together with the CFO of the company, and keep the board advising as to in which direction the working capital management of the business is going. If there are signs of concern, we need to warn the board and the board of directors and the operating people well in advance to take necessary steps so that the working capital management is taken care of. So these are the terms that I thought I would discuss with you in the context of the balance sheet.